Broadcasting from the Business Radio X studio in Alpharetta, it's time for ProfitSense with Bill McDermott.
Good morning. Welcome to ProfitSense. This podcast dives into the stories behind some of Atlanta's successful businesses and business owners and the professionals that advise them. We help local business leaders get the word out about the important work they're doing to serve their market, their community, and their profession, as well as discuss current issues that business owners are facing today across a wide variety of industries. I'm your host, Bill McDermott, and this show is presented by the Profitability Coach. When business owners want to increase their profitability, they often don't know where to start or what to do. We identify the hurdles getting in the way and create a plan to deliver profitability they never thought possible. We have two great guests on our show today. Dr. Robert Matheny with Corvivo Cardio. Dr. Matheny, welcome.
Thank you. Thank you, Bill.
And also we have Don Bravaldo, who is the president of Bravaldo Capital Advisors. Don, welcome to ProfitSense.
Thanks, Bill.
Dr. Matheny, I'm going to start with you, and I'm going to call you Rob, if that's okay.
Yeah, that's fine.
Dr. Matheny is a cardiovascular surgeon and researcher turned entrepreneur. After a successful clinical career, Dr. Matheny founded CorMatrix, now Corvivo Cardio, resting on technology extracted from Purdue University, where he had performed his research. And Rob, I want to start. What led to leaving clinical practice and starting a company?
Part of it, Bill, was default. We had this excellent technology that was showing regenerative capabilities on tissue and couldn't really find a business or investors that wanted to take it up and carry the mantle to apply that technology. And so at one point I just said, I'm going to do it myself. Not having any business experience, that was something that I needed help with. So I sought out some folks like yourself in order to get that going. Slow at first, as you can imagine, but then we had a few devices that got FDA clearance, and then the business started growing more rapidly. And it's very difficult to sustain an active clinical practice and an active growing business at the same time. In fact, I finally had to make a choice of which one I was going to dedicate myself to. And it really boiled down to, I think this technology is so valuable. Rather than doing a case a day or seeing patients myself, I can enable thousands of surgeons to apply this technology every day and actually do much better both clinically in the end run and having fun with the company at the same time. So that was really the nidus for switching over from the clinical practice.
Yeah, I can see that. And honestly, I can see some parallels in our respective fields in our careers, because I had spent over 3 decades in banking. You spent a very long time in practice. And then what you're describing to me really is impact. You have the opportunity, instead of being a solo practitioner, you can create a product that is useful for surgeons and make an impact, potentially not only in the state, but across the country and even potentially across the world. And that's exciting. It's a big experiment, so it's exciting and nerve-wracking all in the same time, isn't it?
Yeah, and that's exactly the way it's gone. We have used the material. We sold off one of our product lines, which was more the simple 510K easy regulatory route to another company. But that product, from the time we sold it to the additional products that have been sold by the company that we gave that technology to, have been implanted in over 450,000 patients now.
Wow.
So that's a number that's growing rapidly that I could never, to use your term, have had that impact myself. So now we're addressing some of the most important markets in cardiovascular, that is heart failure and valves, heart valves, which we can actually, now we're in a pivotal trial to regenerate those valves rather than using bioprosthetics or mechanical devices.
Yeah, I'm going to start talking about it a little bit, but I'd love for you to pick it up where I leave off. So we're talking today with Dr. Robert Matheny. The technology he's describing is known as extracellular matrix, or ECM. It enables the body to regrow tissue that is site-specific. It attracts the body's own stem cells and local cells after application and regrows the exact same tissue that had been damaged or diseased. And so I think what you're describing is the fact that in a cardiovascular environment, this can be used as a patch or as a repair. But explain a little bit about the technology, Rob, and how you came across it.
Right. The nidus of it was some basic research that was ongoing in Purdue when I was practicing in Indiana, and came across that, and it was really serendipitous. Not something that people figured out, but more likely happened across that this material seemed to be regenerating tissue and not going down the default mechanism of healing, which is scar formation, which we all do. So this was doing something different. So we all are familiar with stem cells and the hope and the hype of stem cells. And that was a decade ago. Everybody hoped that stem cells would do it, but what they don't recognize is that stem cells function within a specific environment. That environment is your extracellular matrix. It actually tells the cells what to do. The stem cells are capable of doing many things, but they need instruction on which way to go. That is the matrix. In short form, that is the technology we utilize to direct those cells into forming new tissue rather than defaulting into scar tissue. If you have a heart attack and you place this patch, rather than getting scar tissue formation, you actually get new myocardium formed, or you get a new blood vessel, or in the trials we're in now, you get a brand new regrown heart valve rather than having to have a prosthetic placed.
Yeah, that's amazing. That
nothing works like normal.
Yeah, this really sounds groundbreaking to me. And talking this morning with Dr. Matheny, Corvivo Cardio is a company focused on structural heart disease, such as restoration of damaged heart muscle after a heart attack or damaged heart valves, as he said. The company utilizes the extracellular matrix technology, which, when placed into the body, regenerates site-specific tissue. This tissue engineering enhances regeneration and restores normal tissue and function without the need of prosthetic material. And so, Rob, the question to me would be, what can the technology do that other treatments cannot do, or how is it better?
All the prosthetics that are out there right now, and have been for years, are either metal or they are synthetics, high cross-linked pericardium, or different fabrics, basically, that have been formed into vessels, and those are implanted every day, right now, all the time. And so this is such a paradigm change, because instead of replacing it with a synthetic or a metal or a Dacron tube, we're actually going to regrow your normal artery or your normal valve or your heart muscle and take care of the underlying problem and make it like it was that you were born with, rather than replace it with something synthetic.
Wow, that's fascinating. Could you tell us maybe a little bit more specifically about tissue regeneration?
As I had mentioned earlier, our default mechanism of healing is scar formation. Whether you break a bone or cut your skin, or you have a heart attack or you have a stroke, the healing is by scar formation. So the matrix is actually able to alter that default response into the formation of normal tissue by basically the different cellular mechanisms that we've now identified. This was all quite a black box 20 years ago. And at that time when I started the company, I said, I don't really know how this works yet, and I don't care. I just know that I'm getting new heart tissue, and no one's been able to do that.
Yeah.
So we'll find out later. But in the intervening years, we have defined the cellular mechanisms that are responsible for that. So it all makes sense now, and also gives us a path forward to enhance the material in ways that will make it even better in subsequent generations.
We're talking to Robert Matheny with Corvivo Cardio. The company is in a pivotal clinical trial with a regenerative heart valve and has one regenerative heart failure product cleared by the FDA for clinical use. This technology will replace all current forms of heart valves, whether mechanical or bioprosthetic, with a new living valve. Rob, I'd love for you to talk a little bit about what is the company doing right now and where do you feel it's heading?
We're in our first pivotal trial for our first heart valve. We're about 3/4 of the way through enrollment with that, doing pediatrics as well as adults with that first heart valve, which is called your tricuspid. And it's really the first test site to demonstrate the feasibility. But we have some patients who are now 4 and 5 years out in this trial, and they're doing great. In fact, when they come back for their repeat echoes, the cardiologist who may not be familiar with the trial will often read it as normal heart valve. By this time it is, because about 6 to 8 months after implantation, it becomes a normal valve and the prosthetic is actually gone. So they've regrown normal valve. So our next steps will be application to the other heart valves. And we've already begun benchtop and animal testing on that. So hopefully we will just continue the series so that we can do this application surgically, but also percutaneous with catheter delivery, which is so common today.
This is exciting technology, and of course, I'm excited to be a small part in the process going forward to help get the word out. If someone has some questions, maybe there's a surgeon that's excited about the important work you're doing that might be listening to the podcast, how would you like other surgeons or maybe even hospitals, maybe a medical director, to get in touch with you and the firm?
They can contact me directly, or they can look at Corvivo Cardio to get information on contact. We are recruiting still a couple of centers to be part of the trial. And as far as our FDA cleared product, that is available for application now to patients who have had undergoing bypass surgery that have had damage to their heart from a heart attack.
Yeah. This is absolutely fascinating and to me sounds groundbreaking technology. I'm so excited about the impact that you're going to have in the future, not only for surgeons that can use the products that you've developed, but also the impact that you and the company might have in the future. Thanks so much for coming on. And by the way, for someone who's non-medical, you did a great job of explaining this product because I'm sure it's very complex.
I've done it a few times.
Thanks again for coming on ProfitSense.
Thank you, Bill.
So our conversation now switches to Don Bravaldo. Don is president of Bravaldo Capital Advisors. Aiming high and embracing challenges have characterized Don's career. Known for his passion for excellence, Don is recognized by clients and colleagues for creative solutions and savvy deal-making. And Don, I certainly know that to be true based on our interactions and how we've worked together. But I really want to go back to the beginning. First, congratulations on the time in business. What led to your decision to start Bravaldo Capital Advisors in 2010?
Bill, thanks first for having me on today. It's a real pleasure. I'm going to back up from 2010 because the story really started with a career change. After learning quite a bit in public accounting, after 8 years, I was ready for some new challenges that didn't involve being chained behind a desk. And a recruiter came along and recruited me to join a public company called Hanger Orthopedic Group. We just mentioned a lot about prosthetics, but Hanger is a very large company that specializes in the niche healthcare realm of orthotics and prosthetics. And so they were doing some really great work. When somebody loses a limb, their practitioners will fashion a prosthetic device that fits that patient's leg or arm and then teaches them how to use it. And so this was the late 90s, and Hanger was busy consolidating a highly fragmented mom and pop industry and acquiring businesses across the country and building a rather large company in doing so. And so I got an opportunity to leave public accounting and join the world of mergers and acquisitions by joining the acquirer side of the table. Had a great boss who took me under his wing and really taught me the M&A business. And so ultimately, my responsibility was to travel around the country and buy businesses for Hanger. And so throughout that process, I met a lot of fascinating entrepreneurs that had really created some great businesses. Sometimes they were multi-generational family businesses, but they'd hit a generation where the next generation didn't want to take over. And Hanger was a great acquirer and solution for those business owners to exit their business. However, I noticed a really common theme that often these businesses were unprepared. They often did not have an advisor on their side. And here we were, a big public company with all of the resources at our disposal. And it was our job to generate returns for our shareholders. So we weren't going to point out, look, if you had just prepared or done things a little bit differently, you'd have gotten paid more for your business. And so I saw a business opportunity, and it took a few years. Ultimately, Hanger got into some financial difficulty and suspended their M&A program. But at that point in time, they didn't need an M&A business development manager on staff since they weren't doing deals. And I saw this spot that existed in the marketplace at around $100 million transaction size. There were certainly boutique or regional investment banks that were more than happy to work on those transactions, to coach those business owners, get those businesses ready, and then advise them on the sale. It's going south from $100 million. The landscape really started to thin, and there were few professionals that were willing to work on smaller deals, but yet have the same professionalism. So that was really the genesis of taking the entrepreneurial plunge, and that happened as long ago as 2000. Where I was a sole practitioner for a little while, and then I was probably the third or fourth person to join a fledgling M&A advisory firm. And together we built that business over a number of years. And I became a big piece of that business, and it made sense to really put my own name above the door in 2010. So that's the evolution.
And 14 years later, look at the great business you've built. I'm hearing that a business starts where preparation and opportunity really intersect. We're talking today with Don Bravaldo, the president of Bravaldo Capital Advisors. Throughout Don's M&A career, Don has administered all phases of mergers and acquisitions process, including advising and executing on competitive sales processes, identifying and acquiring acquisition targets, packaging businesses for sale, performing business valuations, extending and negotiating offers, conducting due diligence, and managing the formal transaction process. Don, I'd like to tap into your expertise. What's the current M&A market like, and how has the broader economy impacted your work?
Great questions, Bill. The M&A market for us, thankfully, has really not slowed down. I know that most business people are aware that the headline news is that the M&A markets are off. Well, it's a little bit unfair because they're comparing back to 2021 when basically 2 years of M&A activity were conducted in 1 year. It is a higher cost of capital environment. Interest rates are much higher than they were 2 and 3 years ago. And because of that, certain industries, particularly technology as a sector, the valuations have adjusted to more historical norms. I would say almost every other industry category have remained pretty consistent because if it's industrials or business services, you didn't have much run up in the low interest rate environment. I guess basically the bottom line is valuations are still strong. Ultimately, when it costs more to buy a business, the M&A activity will slow, especially for larger transactions, which involve a lot more debt, and banks being more cautious or less willing to lend into those markets. Thankfully, our marketplace of a couple $100 million or less is characterized with a lot of private equity activity, and many of those private equity groups are executing on what's called a buy and build strategy, where they'll buy a platform company and then continue to add on to it by buying smaller businesses, just like Hanger was doing when I joined them in the 90s. Well, banks are much more willing to lend to that existing platform business, knowing that there's another business that's easy to tuck in. So the financing is available. And whether a bank actually got interested in funding that or not, there's been a rise in proliferation in non-bank lending. And that's really supported the M&A market, especially the lower M&A market. And corporations have remained active. It's difficult to go before the board and justify $1 billion M&A transaction in this environment. Maybe by the end of the year, that those headline type transactions will start to occur again. But it's a lot easier to go before the board and get a $50 million or $100 million deal passed that's strategic in nature and is accretive to earnings. So all in all, it's been a great M&A market. We have had to adjust. From our perspective, going back to last year, it was really more a shortage of human capital. Finding talent was one of our challenges, which we've thankfully solved this year and have just got a fantastic team. In fact, it's one of the best teams that I've had in years. Very excited about how we're positioned to be able to handle what really has turned into a rise in work. The supply side for us, business entrepreneurs, owner, founders, families are coming to market suddenly and have decided that now is the time to sell their business. Normally, we'd be very slow during the summer, and we've got a long pipeline and are close to reaching capacity on what we can serve at this point in time.
That sounds pretty exciting. Yeah. The baby boomer generation is retiring, and those baby boomers that own businesses are looking for an exit. I'm wondering if you can share a success story of a recent M&A deal that you've been involved in.
Sure. We've had two great success stories to start this year off, which is a little uncommon. Normally, these transactions happen at the end of the year after working on them hard. But one of them, family business that was a real pleasure to work with. It was a third-generation family business, and the fourth really wasn't going to be able to take over the reins. And the current group of owners realized that they had achieved a really competitive market position in the geography that they served. This was an aggregate mining company, and they took a little while to warm up to us. We actually worked on this engagement over a multi-year period of time, but we had some work to really get the business in shape to go to market. And when we ran the process, we found that a lot of very strategic companies, public and private, were really interested in the business. It served a growing marketplace and was an industry leader in their geography. Ultimately, we found a competitive bidding situation, which allowed our clients to receive a premium offer and to find the right buyer for their business. In fact, if I think back correctly, when we first met with them, the year before we started working with them, they had received an unsolicited offer, which ultimately we were able to triple by the end of our work together. So that doesn't happen very often. I don't want to set that bar that high. The second case was another terrific situation, an outcome for the business owners, a little bit difficult in that this family business, there were two owner founders, one who passed away unexpectedly and the other one became incapacitated. So the two wives ultimately, who had no interaction with the business, became the owners de facto of the business. And they were really fortunate in that they already had some good advisors, good CPA, and a good lawyer that worked with them and were in an informal board. And that board reached out to us to get us involved. And so ultimately, we were able to get that business ready for sale and then orchestrate a competitive sale process, which ultimately ended in a 2x offer for that business in the security area. They had also had some discussions prior to the owners becoming incapacitated or passing away. And so they did receive an offer which they didn't accept. So we had a bar that was set and we were able to double it.
Yeah, that is a great story. And the piece that resonated with me is the advisors that were advising that business called you, which speaks to the quality of the work that you and your team do and the reputation. We're talking today with Don Bravaldo with Bravaldo Capital Advisors. BCA is a boutique Atlanta-based mergers and acquisitions and corporate finance advisory firm. The BCA team is a senior deal team with extensive knowledge and insight into the full cycle of M&A and corporate finance engagements. Don, I want to switch the topic, thinking like an owner, which actually means thinking like a buyer. What should growth companies consider regarding M&A or access to capital in today's private M&A and capital markets?
Sure. First off, realize that the capital is available. It's the cost is just much higher. And you got to weigh the different cost and benefits of seeking out that capital. It would always be wise to first look at the working capital situation and see if suppliers and customers changing terms can free up more capital to run the business. That's usually the least expensive way. Traditionally, bank financing is the lowest cost of capital out there, but you do have a situation where bankers are a lot more cautious. They're going to be very conservative if they're lending into even a growth company. For example, we've got a fascinating manufacturing company right now that we're talking to and advising that's manufacturing nutraceuticals. So it's a terrific business. The management team is really growing that business. They need working capital. And part of our job is going to be to sit down with the lender after having gone through and worked with the company to get their financials on an accrual-based accounting financial system and then adjusted to GAAP, generally accepted accounting principles. I think once the banker realizes that the financials are clean, and we've also found an outsourced fractional CFO to help them, I think they're going to have a lot more confidence to raise the line of credit and give them more access to capital for their working capital needs. But outside of that, there are plenty of non-bank lender options. Again, going to be a lot more expensive than that bank route, so we're going to try that first.
That makes sense. So last question, but before I ask this question, I have a quote here by you that I absolutely love that I want to share with our audience. This is Don Bravaldo's voice, but I'm speaking it. I continue to be fascinated by the endless paths to business success. Helping passionate owners and entrepreneurs successfully complete a transaction that will lead to financial security, be it through a successful merger, acquisition, or shared insight, energizes and inspires me every day. What a great thought, Don. I want to close our time together, which I have loved. This has been great information and great insights for our listeners. But what are a few things that business owners could be focusing on now, Don, if they're thinking about selling their business?
Great question. It really starts with now. Start to prepare now. And that's quickly followed by, as we referenced before, having a good group of professionals that are familiar with M&A or capital raising is going to be invaluable over the next few years if you're thinking about exiting the business or bringing on growth capital or recapitalizing the business. And finding that attorney to provide legal advice that's familiar with M&A and is an M&A specialist, or bringing on a CPA firm that can help get those financials on a GAAP basis. Planning personally with a wealth manager or doing some estate planning in advance. All of these things are activities that a business owner can start on a couple of years in advance of a sale. Other than that, Bill, you and I both know that a lot of lower middle market size businesses, say 50 million in annual revenues or less, probably the number one issue that I see is a concentration in sales.
Yep.
And if you have multiple years to prepare for a sale, let's start working on diversifying that customer concentration. And if it's a big box retailer or Walmart or something like that, it's hard, right? It's hard to go from a 70% and bring that down to 10. You're not going to do it, but you could add a few more customers.
Sure.
And that's going to make that business a lot more valuable. And that's quickly followed up by often these same size businesses can all use improvement in financial report, right? It could be a family business where the controller or the CFO really is at the level of a bookkeeper. And so upgrading that ability to have clean financials by bringing in an outside CFO to get things in shape, that helps your M&A advisors tremendously because it allows us to do what we're supposed to do, which is market the business for sale instead of spending a lot of time trying to fix the financials.
Yeah. It is all about the numbers in the end.
At the end of the day, the numbers are important, but I'll tell you, people are the ones that make the numbers. And so having a quality management team is a huge deal in getting a premium for the business.
Yeah, excellent point. Don, I'm sure we've got some baby boomer listeners that are business owners and are thinking about an exit and want to take the next step. So what's the best way for them to get in touch with you and the firm?
Sure. Our website is BravaldoCapitalAdvisors.com. No spaces, all one word. And on it, it'll be easy to reach out and call our main telephone number or email us as well.
Don, it's been great having you on the show. Appreciate the insights and the expertise that you've brought to our listeners today.
Thank you, Bill. Enjoyed it.
I want to spend just a moment talking about some of my entrepreneurial journey. In today's uncertain economy, it's more important than ever for business leaders to make the right bets. But how do you de-risk your decisions and ensure that you're making the best choices for your company? After running my own business for 15 years, I've concluded that starting a business is like one big experiment. Looking back, I think there are two important points to be successful. Number one is first, fire bullets, then fire cannonballs. This means starting with a small, low-risk experiment to test your ideas, and once you've validated your concept, you can then go all in with a larger investment. This approach helps you avoid making costly mistakes and gives you time to course correct if needed. I believe my bullets, which became cannonballs, were profitability coaching and then exit planning. The scope of work has increased, and my average revenue per client has increased over time. Number two, find your true calling. This means understanding what you're truly passionate about and what you're best at. Run a business with those components. Once you know this, you can focus your resources on activities that are most likely to lead to success. Because my desire was to leave a legacy of making business owners better financial managers. This meant we take time to understand the accounting in their financial statements, what those financial statement trends were telling us, and what course of action we need to take. I love to coach and live for those light bulb moments when financial confusion becomes financial clarity. The opportunity to listen to business owners share their stories of where they are and where they want to go helped me find my true calling. If you want to keep up with the latest in pro business news, follow us on LinkedIn and Instagram at The Profitability Coach. If you want to listen to past or future ProfitSense episodes, you can find us on ProfitSenseRadio.com. This is ProfitSense with Bill McDermott signing off. Make it a great day.